Hello everyone, I hope you guys are having a wonderful day, making some really good trades, and yep, let's just get into it. And right now we can see that Bitcoin is back down to $40,371 right now. A big move down today as we rallied up to 42,750, but right before we get into that, just want to thank everyone for the massive support we saw in yesterday's video. We reached a new high. I've never seen so many likes. We got 93 likes in that last video and over 579 views. It's crazy. So if you guys want to support the channel, please leave a like, smash that like button. And you know what? For every like we get in this video, I'm going to do a giveaway per dollar. So every like that we get equals $1. So if we get 100 likes, I'll give away $100 in the Discord tomorrow. Okay, so it's up to you guys to see how big you want the giveaway to be. All right, moving on. Right now Bitcoin starting to come back down. You know, we had a really bullish candle yesterday on the DBSI and on Market Cipher A, but now starting to turn the tide. You know, we did end up exiting our position today in profit, 20% profit, and right after that we entered our short position like I mentioned in yesterday's video. Once we get to 42,750, we are going to see some resistance, at which point I will enter a short, and that's exactly what we did. And we are now over 40% in profit at the time of recording. Again, that could always change, but things are going quite well. So if you guys want to see those trades, you know, you guys can join the Discord. And again, let's take a look at Ethereum as well. We perfectly touched 3,157, and from there on we reversed down. So you guys can take a look on the 4-hour time frame, just some wicks above this line, and now we're starting to come back down close to 28.80. So once we get there, we might close our position, but if we start to break lower, we're going to be taking a look at 26.20. Again, a big move in the traditional markets today. You know, a big update at the beginning of the day on the Nasdaq, up 1%, and ended the day down 2%. So a 3% move today in the Nasdaq. Very bearish. And we can see right now on this chart that I'm going to be illustrating right here, it looks to me that we are creating a bit of a bearish pattern right here, bearish flag, or a bear flag, if you will, right here on the daily time frame. So you can see right here we just had some wicks right now. Let's just get that trend line a little bit better. There we go. So we see that we're topping out around these levels, and we're starting to come back down right now to retest 39,763. Again, we just bounced off of it, 39,700, and if we do come down, in my opinion, it doesn't look like it's going to be holding a support this time. You know, we've retested it so many times. If it's going to give and we do end up going down, you're going to be taking a look at 37,634, at which point I do expect a significant bounce from there. You know, we might even come back up and retest 39,000, or even retest, you know, 43,000, but this is all going to depend on current market conditions. And right now, I don't know if you guys saw, but there was the IMF meeting today, and Jerome Powell spoke, and he seems pretty confident in accelerating the interest rate hikes in the US, which is quite bearish. And we can see the bond yields right now reaching over 2.957% right now on the 10-year note. We are at 3% on the 5-year. Absolute insanity. The bond yields are getting the bond prices are getting killed right now, and you know, the pain is only beginning, in my opinion. You know, we still have 8.5% inflation, where we have a really weak economy, but the Fed keeps advocating that we have a very strong economy. If the economy is so strong, why don't we just raise the rates, the 5, 6, 8, 10% to fight the 8.5% inflation that we have? And the reason is because we have too much debt, and the economy is not strong. The economy is weak, right? I know it's difficult to admit, but Jerome Powell will have to cave in at one point and admit the economy is not strong. Let's take a look at the hash ribbons at the moment. Hash ribbons still looking good. We haven't crossed yet, mind you. They are getting still, you know, they are pretty close together, but we're just gonna have to see what happens. Maybe this is this is the bear flag that we have been talking about, right? We did get rejected at 48,000. Now we're starting to come back down. Are we going to go to 50,000? In my opinion, I don't think so, but you know, you never know what could happen. Right now, what's the important thing is that we're in profit on our trades. Let's take a look at BTCTA2. Now we got pretty close to 39,600 right here. If we do end up coming back down, we might take a little bit of a bounce here, but if that gives in, you want to take a look at 38,125, and after that 36,000. But again, this pattern right here, in my opinion, will be, you know, a significance will be pretty important in my opinion, as we will get a significant bounce around these levels. Again, if we don't bounce at these levels and we start breaking, then you want to take a look at some lower levels like 34,000, and then after that 32,300. But we're just gonna have to see how this plays out. Again, these tech stocks are absolutely getting killed now. We are in a bit of a red at the moment on our tech stock positions, but we're just going to hold them for the time being, as there's no leverage associated, so there's not too many crazy losses, unlike the crypto markets, right, where you can incur significant losses. Now I'm going to show you guys a chart that I didn't show in yesterday's video because I forgot, but we're gonna be covering that. It's basically the chart that's in the thumbnail. We're going to be taking a look at it in just one moment. And voila, this is the chart that I was talking about yesterday that is quite concerning. Again, it's a lot of speculation, but for the time being, this is a pattern, right, on the Dow Jones from 1920 or between 1910 to 1930. And we could see that this right here is today's chart, right, from 1986 to current date 2022. And we could see a very similar pattern, right? It's almost like it's copying the 1930, you know, market crash that happened. And we can see that right now this would be around the area that we are currently, right? Now, the author of this chart is CR35. I'm going to be posting the link in the description. But basically, he's saying that we are preparing for the last blow off top before the Big Depression, right? And we're going to have one last giant pump towards the upside, and then it's going to be a massive crash to the downside, and we're going to reach the 2008 lows, right? As we can see, the 1930s, when the market crashed, we did reach around the the lows of this area, which would match around the 1930s lows as well. But in my opinion, if this happens, this is going to be a complete disaster. You know, this could be housing and you know, over leveraged hedge funds and all that stuff crashing all at the same time, just because the interest rate hikes are just too much. There's just too much debt, and honestly, it could be all coming to fruition now. You know, I've been talking about this for many months for you guys have been subscribed here. You know, I completely think that rising interest rates are going to have a ginormous impact on the amount of debt that the Fed carries, right? And especially housing, as the housing rates are on the rise at the moment. You know, especially in Canada, the prime rate just reached 3.2% now. Mortgage, you know, 5-year fix is like 4.5% now. So, you know, this is going to have a huge impact on the Canadian housing market. You know, as wages and housing prices have become so detached. You know, someone's average wage is like $50,000 to $70,000, but houses in Canada are 1 million plus now. So how is anybody supposed to afford a home? And what happens when you're giant? You know, right now it's okay because you have a really small interest payment and a very big equity payment. But when they start to raise the rates and the mortgage rates get massive, you can't have a giant equity payment and a giant, you know, interest payment. You're gonna have to calibrate somewhere else, because you didn't make an extra $30,000 in your salary to pay for all this additional interest. You're gonna have to sell your home and buy a cheaper home. But when you have that happening times, you know, millions of Canadians, and then you're gonna have a housing market crisis. But you know, a lot of people don't like me talking about this. I'm gonna probably get more into it in a different video, but for the time being, this is just a little spiel that I'm going to give you guys. And we're going to get back on the charts quickly. Let me just stop recording this. Okay, getting back on the charts right now, and after my big housing market rant, we could see that Netflix, you know, had another big down day today. We're just going to cover a little bit of the markets before we end the video. And right now, Netflix is down another 3.5% today. You know, getting a little bit of a no, sorry, that's not the candle, but getting a little bit of a you know, rally up from the lows of like 212 or 210, if you will, and then, you know, ending the day flat. But today was the day that Bill Ackman, one of the hedge fund managers on Wall Street, realized a $400 million loss after buying Netflix around the peak 3 months ago. He bought Netflix with a $1.1 billion buy, and now today he's realizing a 40% loss on that $1.1 billion buy after taking, you know, massive losses after that buy. But you know, it's pretty significant in my opinion that Bill Ackman is starting to realize some losses. You know, this shows you that he may think that the stock could go significantly lower from these levels, and the stock can go significantly lower. You know, we are still at 218. We could even technically fill the gap around, I guess we filled the gap there, but technically we could still fill the gap at 106 on Netflix. You know, you never know what could happen. We filled the gap from January 2018, but just goes to show that these tech stocks are extremely overvalued and can still fall significantly as people de-risk and start to buy value assets, or just basically selling all their assets. And you can see that the DXY is spiking right now back up to 100. Anyways guys, thanks for listening. You guys are awesome. Let's see if we can get 100 likes on this video, and leave a like, you know, if you enjoyed the video. If not, then you can actually leave a dislike, and don't forget to like and subscribe. Peace. If you guys haven't already, you guys can sign up for Big Cat Trading. Links in the description. Help support the channel.